So far in 2022, there are two stock splits that made the headlines. On 2nd of February, Google's parent company Alphabet announced that they'll be doing a 20-to-1 stock split. And for the first time ever since 1999, Amazon also announced that they'll be doing a 20-to-1 stock split. So in this video, I'll be sharing with you what is a stock split, what are some of the benefits of a stock split, and if you're a current shareholder of Amazon, how does this affect your position? And also, if you're not yet invested in Amazon, should you buy Amazon before or after the stock split? So to best illustrate what is a stock split, I've actually went to the supermarket earlier to buy a piece of frozen pizza and use it as an analogy for stock split. So imagine all of a company's shares represents one full pizza. If a company announces a 4:1 split, this means that each shareholder will get 3 additional shares. The original price of the company, if let's say it is at $400, this will be divided into 4, so that means each share will represent $100. It's important to note that the value of the share actually remains the same. There's no dilution or no change in the share itself, but rather it's just being split into more pieces, and in the case of Amazon, the shares are split into a 20-to-1 ratio. This means that if you own 1 share of Amazon, you'll get 19 additional shares. And looking at the current price of Amazon is about $3,000 per share. So after the stock split, Amazon shares would be divided by 20, which means that it costs around $150 per share. So what are some benefits of a stock split? So historically, companies that do a stock split tend to perform better than the S&P 500 index. So as we can see from this graph, according to some analysts from Bank of America, since 1980, S&P 500 companies that have pursued splits tend to see share prices outperform the index 3, 6, 12 months after the announcement. Another key benefit of stock splits is that it can help to improve liquidity. But this isn't a big issue for Amazon because Amazon shares have a trading volume of about 4 million shares per day, and there's no problem of liquidity here. That said, I think there are 3 reasons as to why Amazon is doing a stock split. Firstly, it gives employees in Amazon greater flexibility in managing their equity in Amazon. Just imagine, the price of one Amazon share is $3,000, and this might be already more than your monthly salary if let's say you are an average employee working at Amazon. So this makes it very hard for employees to manage their equity and buy shares of Amazon. And the second reason is because since Andy Jassy joined as a CEO in July, Amazon's stock performance has been going down, dropping at about 16% up till now. And this stock split will really help to improve investor sentiments because following a stock split usually means that the share price will increase, just as we've seen in Google's stock split earlier this year. And more importantly, the stock splits can help retail investors and traders take advantage of Amazon stocks at a lower price. So just imagine if you want to own Amazon, but you can't fork up $3,000 just to buy 1 share. After the stock split, you can actually purchase Amazon shares at about $150 per share. This is a great benefit if you're not able to trade fractional shares, and at a price of $150 per share, it is an easier way for you to dollar cost average your way down as well. It's also easier for you to rebalance your portfolio because last time you would have to sell your Amazon shares at $3,000 per share, but now you can sell it at a smaller denomination of $150 per share. Also, in the options market, the minimum amount to sell put options would be $15,000, which is derived from 100 times $150 per share, compared to before the split. If you were to sell put options, it would be 100 times $3,000, which gives you $300,000. And this is a huge sum for retail investors, let alone for hedge funds and other institutional investors. So the question is, should you buy Amazon's share before or after the stock split? I think the decision to buy a company's share should not be purely just because the company is doing a stock split or because the company is doing share buybacks, but rather it ultimately depends on the fundamentals of the company. Based on what we know, Amazon has raised its prices for Prime memberships from $119 to $139 ever since February 18 for new members. This highlights Amazon's pricing power as they are able to charge higher prices for their Prime services. And Amazon also continues to invest heavily in AWS, which has generated $17.78 billion, which represents a 40% growth year on year. Their advertising revenue has also increased to top 3 worldwide in 2021, behind Google and Meta at $31 billion, which is a 57% growth since its previous year. So Amazon is really such a great company with high margins, profitability, as well as a strong moat that it has built up across these years. Amazon is a company that has a huge runway of growth, and is definitely a company that I'm excited to own for the next 10-20 years. I hope you've enjoyed this video, and do share with me down in the comments what are some of your thoughts about Amazon stock split. Are you a current investor of Amazon, or do you plan on buying more Amazon shares? Meanwhile, you can also check out my other investing videos over here. My name is Tess, take care, and I'll see you in the next one.